What's up, money lovers? Welcome back here today on a nice little Friday hike. Got two special co-hosts, Khaleesi and Ragnar, joining us. So a few weeks ago, I had posted a video basically saying, in these times of uncertainty, just buy the index fund, do things like that. When the portfolio's tanking, red days, red weeks, weeks after week, don't pay too much attention to it. Get out in nature, listen to the birds, do yourself a favor. I should take more of my own advice too. But anyway, I want to talk about two strategies. There's two ways I see you can approach this. I had mentioned, investing in index funds. And today I just want to take it one step further. I want to give you guys two outlines the way I see how you can invest during these uncertain times when, there's really just nothing to be bullish about. It seems like in the short term, things are just getting worse. Inflation going up, rate hikes going up, the war in Ukraine getting worse, no signs of getting better. So here's the two ways I see it. You can either use this time. It's a great time to go all in, load up on your beaten down, depressed stocks that are your highest conviction, growth plays like your Teslas. And this is what I did, during the COVID crash. And that's part of how I made such a huge return so fast. I made 600% on my Tesla shares. And now Tesla is the majority of my portfolio. Because of that, 65% of the portfolio. So for my situation, I want to take a little bit of responsibility. It is tempting to just go all in on Tesla, and that could work. It all depends on your risk tolerance and if you can stomach the drops and watching it crater every day. Because we know in the long term, nothing has changed. In 2030, I still think Tesla will be the biggest company in the world. But in the meantime, so I'm still buying a little bit of Tesla. I've got my little system here now. To buy new Tesla shares, I put $10 in for every Tesla I see. But in the meantime, I'm also taking steps to, take risk off the table. Since I started doing options about 6 months ago, I probably made about 33K. But I've taken a lot of that risk off the table because this is not the time to be, in margin. You want to be deleveraging, de-risking. And so the way I see it then, use this time. What I'm personally doing, I am still putting money into index funds. As I said, I'm putting a little bit money into Tesla. I'm also putting money into other things like US dollar coin, which I'm getting 9% interest on, and the value of the coin doesn't change. So instead of putting all my money in the savings account, where it gets no interest, I'm using that. I also did things like buying VYM to help, stabilize my portfolio, hoping a little bit. Gets me a lot of exposure to the industries that will do fine in a recession or as this situation continues to worsen. I've got a lot of financials, I've got a lot of energy exposure with that, telecoms, just consumer staples, really. Things like Johnson & Johnson, Home Depot, those are also in that portfolio. So those are the two ways I see to play it. It's either you go all in on your high conviction plays, or you do a combination where if you want to go a little bit safer, that's what I'm electing to do. I'm adding things like the VYM, the index funds, US dollar coin, and you could even go bonds at the extreme end. I might have to look a little bit more into that because there is an inverse relationship. As stocks go down and interest rates go up, people will be going more into bonds probably, so that's another option. So let me know what you guys think. What stocks have you been buying? How are you hedging yourself? I'll see you guys on the Oracle Investment Club collab with Tim. I'll be posting that on Sunday. Have a great weekend, everyone.